Hello and welcome. If you've ever looked at the Indian stock market and thought, wow, that looks complicated, maybe it's just for the experts, you are definitely not alone. So many people see it as this huge, intimidating financial maze. But what if I told you that today, we're going to give you the map? Let's dive in.
People often say the world of investing is a jungle. And you can kind of see why, right? It feels like this wild place, full of roaring bulls and prowling bears, a place where you hear these crazy stories of fortunes being made and lost. From the outside, it just seems chaotic and maybe a little dangerous.
And that really brings us to a huge question. As you stand at the edge of this jungle, what are you? Are you a fearful tourist, just kind of watching from the safety of the sidelines? Or are you ready to become a confident explorer, someone who has the right tools and knowledge to navigate it? That's exactly what we're here to do, to help you make that leap.
So here's our game plan. First, we're going to bust the biggest myth about this jungle. Then we'll figure out what a share actually is. We'll check out India's two main marketplaces, learn how to read the economic pulse of the country, and then get you ready to start your own journey.
Okay, let's tackle the big one right away. The number one reason people are scared of the stock market. Is it really just a big casino, a satta bazaar, as they say? Or is it something more, a real engine for growth?
I mean, we've all heard the horror stories, haven't we? My friend's uncle put all his money in the market and lost everything. This idea is everywhere, but it almost always comes from one critical mistake. People wander into the jungle without a map. They treat investing like buying a lottery ticket. The losses? They come from a lack of knowledge, not because the system itself is broken.
And this slide really breaks it down perfectly. Look at the two sides here. On the left, you've got the gambler. Their mindset is satta, it's a do-or-die bet. They'll throw in ₹1,00,000 with zero knowledge and, well, the outcome is almost always the same. They lose. But then, on the right, you have the investor, the lion. Their mindset is totally different. They're buying ownership, a hissa. They take the time to understand how a company grows. And guess what? That's how you end up ruling the jungle.
Okay, so here's the absolute key takeaway. Investing is not about betting. It's about ownership. But what is it that you're actually owning? Let's break down the single most important building block of the entire stock market, the share.
A share, or as we often call it, a hissa, is nothing more than a legal slice of a company. That's it. It's your piece of the pie. You are literally buying a tiny part of a business. And if that business does well, if it grows, then the value of your little piece can grow right along with it. Simple as that. Let's make this even clearer with a quick story. Imagine you've got a great business idea. You need 1 crore rupees to get it off the ground, but you've only got 50 lakh yourself. So you go to 5 of your friends, and they each pitch in 10 lakh. Boom. Right there, each of your friends has just bought a 10% share, a 10% hissa in your new company.
And here's the deal with that ownership. That 10% share means your friend gets 10% of any profits your company makes. Awesome, right? But, and this is important, it also means they're on the hook for 10% of any losses. It's a two-way street. Now, just take this simple idea and scale it up. That's exactly how huge public companies work, just with millions of owners instead of 5 friends.
All right, so now we know what a share is. We get the concept of ownership. But where does all this action, the buying and selling, actually take place? For that, we need to look at the map of our jungle, which shows us India's two main marketplaces. In India, pretty much everything happens in 2 major places, or stock exchanges. First, you have the BSE, the Bombay Stock Exchange. This is the granddaddy of them all, located on the legendary Dalal Street. It's Asia's oldest exchange, started way back in 1875. Then you have the NSE, the National Stock Exchange. It's the newer kid on the block, established in 1992, and it totally changed the game by being India's first fully electronic exchange. So why do we need 2? Well, think of it like you're shopping for a new phone online. The exact same model might be for sale on 2 different websites. You're a smart shopper, right? You're going to check both and buy it from wherever you get a slightly better price or faster delivery. Investors do the exact same thing. A lot of companies are listed on both the BSE and the NSE, and investors will trade wherever they get the best deal at that moment. Okay, we've got our map, we know the marketplaces, and we understand what we're trading. But how do you get a feel for the mood of the entire jungle? How do you know if it's a good day or a bad day for the market as a whole?
This is the question you hear on the news every single night, right? The market was up today, or the market took a nosedive. What does that even mean? I mean, with thousands of different companies, how can they just say the market is up or down?
It all starts with this number, 30. This is for the Sensex,
which is the main indicator for the BSE. Now, trying to track all 5,500 companies on the BSE every second would be impossible. So instead, the Sensex just tracks the average performance of the 30 biggest, most important companies. It's like a quick snapshot of the overall trend.
And for the NSE, the magic number is 50. This is the famous Nifty 50. It does the exact same job as the Sensex, but for the NSE by tracking the performance of the top 50 major companies listed there.
So the best way to think about Sensex and Nifty is like a barometer for the entire country's economy. You know, like a weather barometer tells you if the pressure is rising or falling, these indices tell us about the health of our economy. When these top companies are doing well, the index goes up, and it generally means people are optimistic. When they're struggling, the index goes down. It's basically a mirror reflecting the nation's financial health.
So let's just take a breath here. We've busted the myths, we've defined the fundamentals, we've mapped the marketplaces, and we've learned how to check the pulse. You now have the basic toolkit to start shifting your entire mindset, from being that fearful tourist to becoming a confident explorer.
And let me be really clear about this. Stepping into the market without this basic knowledge is like watching a pilot fly a plane and then thinking, yeah, I can do that, and jumping into the cockpit. It's a recipe for disaster. Think of what we just went through as your very first flight manual. It's that important.
The hard truth is that for pretty much all of us, our education system just didn't teach us this stuff. Financial literacy was never on the curriculum. And because of that huge knowledge gap, this myth was born that the market is just a big casino. But it's not. It's a powerful, structured system designed for creating wealth and participating in the country's growth.
So, today, we've given you the map. You understand the terrain, you know how to read the most important signs, and you see the massive difference between a reckless gamble and a thoughtful investment. Really, the only question left is, where are you going to explore first?